Okay, it's been a long course. 12 weeks, 4 videos introducing new concepts every week. That's a lot of new terms you've had to learn. So let's just do a rapid run through them to remind yourself what you've learned and how much you've learned. We started week 1 by looking at what is money. We saw that modern money is fundamentally a social convention, and it works simply because we trust it. That money has 3 functions: as a store of value, as a means of payment, and as a unit of account. Digital monies differ fundamentally by who issues them and how widely they're accepted. Banking and payments are inherently quite different. Banking is about managing or optimizing risk, whereas payments is about minimizing risk and maximizing network size. In week 2, we looked in detail at the mechanics of digital payments. How does the clearing and settlement happen between payer and payee, and in fact between their own banks? We looked at the structure of a payment use case, and we differentiated between the store of value, where the money starts and ends, the instrument that is used to make the payment request, and the channel through which the payment is processed. We saw that payers need a credential to prove who they are, and that payees need an acceptance device to receive notification of the payment. And we saw the difference between push and pull payments. Push payments are initiated by the payer, whereas pull payments are initiated by the payee, though of course they still need to be authorized by the payer. In week 3, we looked at the broader ecosystem in which these payments occur. We looked at the concept of the national payment system and how it's managed and overseen. We looked at different risk categories, at the business case, and how different players in the value chain pay or get rewarded through interchange and merchant fees. And we looked at the characteristics of different payment systems from various points of views: providers, customers, regulators, etc. And then we looked specifically at modern retail innovations, particularly the mobile ones. We saw how your typical bank card is going from a Max stripe, the black strip that you have in the back, to a smart card system with a chip, with a secure EMV standard, and with the NFC standard, which allows the card to work on a contactless basis. We saw how you can make digital transactions online when the card is not present. In developing countries with less banking infrastructure, we saw how you can build cash-in, cash-out agent networks using retail stores that exist in every neighborhood and every village, how they become the aggregation point for cash in the community. And we looked at how non-bank e-money issuers work, how they maintain pooled accounts that provide 100% backing for the electronic money that they've issued, how they hold the fiduciary trust on behalf of their customers. In week 5, we looked at things from the customer perspective. We developed frameworks to understand their pain points, particularly around cash, how to think about their needs and aspirations, what kind of tensions they experience around their payment needs and their broader money management. We divided the market by payment pools, B2B, B2C, etc. We sized them up and looked at the various user requirements associated with each. We introduced behavioral economics around the issue of behavioral change. And we looked at field research methods, quantitative and qualitative, including financial diaries. And in week 6, we explored how these customer insights can be turned into market advantage, how you can create customer journeys and product life cycles that guide your activities. We looked at the marketing levers that you have, and in particular the 4 Ps of product, price, placement, and promotion, and how you can use human-centered design techniques for product and process development under the principle of rapid prototyping. Okay, we're flying. Perhaps you want to take a break, hit the pause button, get a cup of coffee, and we can continue. In week 7, we looked at the technology and operational enablers behind all of this. How do you present a menu to the customer in an easy, friendly user interface? What mobile channels should you use to exchange the data, and where should the application reside? We looked at the broader notion of identity and how we use authentication factors as proxies for that identity, and the need for data protection. We explored how you can ensure that data is not intercepted or tampered with as it flows through the network. And we introduced broad fraud management concepts, the need for proper authentication, authorization, and accounting, and how the policies around that need to be proportional to the risks involved. We had a week on regulation, where we established certain principles of what is an enabling regulation, of proportionality to risks as well. Then we looked specifically on financial integrity. How do you prevent money laundering and associated know your customer policies? We looked at the competition aspects and how do you deal with market dominance. And we looked at consumer protection aspects. How do you give recourse to customers? How do you resolve disputes? The disclosure that you need to make things transparent to customers. In week 9, we looked at how the industry comes together. What clearing models exist so that providers can clear and settle payments between each other? What are the higher level interoperability issues that arise in modern payment systems? What about the network level access that you can give developers through application programming interfaces so that they can develop products on top of what providers do? In week 10, we looked at disruption and introduced the notion of coopetition. In networked industries, very often, providers both need to cooperate, as we saw in week 9, but also compete, sometimes very aggressively. We looked at disintermediation models, digital or online models that seek to take out the notion of a bank between savers and borrowers through peer-to-peer or crowdfunding sites, for example. We looked at entire payment architectures that try to remove banks from being gateways in the payment system itself and the associated blockchain technologies. And we looked at the imperative of size in network businesses, how network effects often create a winner-takes-all situation that creates deep competition issues. In week 11, we extended all of this to international context. We looked at how remittances happen through banking correspondence and nostro accounts. We looked at a bunch of international standard-setting bodies, SWIFT, ISO, EMV, PCI DSS. And we looked at success cases in developing as well as developed markets and introduced the notion of tokenization used by Apple Pay. And this week, we've taken a broader view around all of this. In an inclusion setting, it's important to make sure that you can connect the three representations of money: the physical cash that is today's reality for most people, the digital money that you want to introduce, and the mental ideas that people have around money, the psychology around it. We looked at the progression towards cashlessness. What are the requirements for that to happen? And then we took some lessons from the global financial crisis of 2008. We saw how modern financial systems and within interconnectedness are subject to contagion. And because of the close linkage between banking and payments, how that introduces the too big to fail problem. Our payment system cannot be allowed to fail because then no money can move in the economy. That's a lot of concepts indeed. In fact, there's a lot of new terminology you will have learned. Don't be put off by that. Understand that every profession has its own jargon, and precision of language is important in order to have deep, meaningful conversations with your colleagues. It's a very fast-moving space, so you need to keep updated. We know we will need to. This course will probably look very different 2 years from now. And please stay with us on your professional development journey. We see this course as just the beginning of the journey we can take together. So stay with us. Join our network.